Cardano is well known for its safe, secure, and reliable 3 to 5% staking rewards you can get from staking ADA. But what if there was a method where you could 6x your yield streams in Cardano using a single dApp? Well, there likely is going to be a method, and this comes within the next week or so. Yeah, week or so. Not month, not year, week. Liquid Finance has finally announced their mainnet release, and it's coming very soon. Let's talk about it. First things first, though, if you want to support the channel and also earn passive ADA on your ADA in the good old reliable way of Cardano staking, you can do so with the Jack stake pool. Now, what we're covering today specifically is Liquid Finance. They have yet to release their mainnet dApp. As you can see here, launch app soon. But they have been building for nearly 2 years now, and I do think that their launch will make a lot of waves in Cardano's ecosystem, as this is one of the dApps compared to some others that haven't launched and have been building the entire time throughout the bear market and the bull market, and have been patiently putting in hard work to make something high quality and release it here on mainnet. Even in a bear market, there's a ton of people getting actively into this, and we're going to take a look at their token, the token chart for LQ. But first things first, just going over the launch, when it's coming, how it's happening, and also some of the things in between the token price, and that including 6x yield streams. Yesterday, Liquid tweeted, next stop, Liquid V1 mainnet launch next week with a quick testnet or two in between. So if you're someone who wants to take advantage of testnets, definitely do so, as we can find bugs and just make a better mainnet release. And also you can get some experience without playing with your actual money, which is fairly important. So I would recommend that if you're planning on doing mainnet and you don't know what you're doing, consider using the testnet. It's a great tool to learn on for sure, or just use small amounts of the mainnet when you're learning. That's at least what I do, but I'm a guy in my mom's basement. Maybe you shouldn't be touching this at all. Make your own financial decisions, essentially. So this is pretty exciting. This is coming very, very soon. As you can see, this is the draft Liquid V1 audit report, January 25th, 2023. This kind of goes with their launch step list, and the step list included an audit. Audit is complete, so now we're thinking next week mainnet launch. Now briefly, let's go over some Cardano staking. As I mentioned earlier in the video, Cardano staking is currently 3 to 4%, around 3.5% to call it conservatively, or probably just accurately, I'll be honest now. Cardano staking rewards have went down quite a bit since I first got into Cardano around a year and a half ago, and that's okay. That's kind of how the system was designed. But initially also we had 15 to 30% staking rewards, and we're definitely not at that anymore, but we can be close to that in terms of APR or APYs, though not as sustainable will be with Liquid Finance. Above, you can see here, this is Liquid Labs and them comparing the staking rewards, currently 3.5%, and then the ADA supply to Liquid at a 60% market utilization rate or above. So that means 60% of the kind of tokens are being lent out and utilized in the market. So this is a parameter that you have to keep in mind. It's pretty important. You can then see at that point a 6.1 to 178% return in APY for supplying ADA to Liquid. Algorithmic automated ADA lending plus Liquid staking creates a new base on-chain yield in Cardano. Now keep in mind, no one is saying that you are going to get 100 to 178% yields guaranteed, no risks here. There is a lot of circumstances that lead up to that, and likely, although it's possible and in theory on paper it could happen, it probably won't be you who's getting that crazy yield, and if you do, it won't be for a sustainable period of time or a longer period of time, and you have to keep that in mind. Numbers are high, numbers are great. 40% APY is insane, but it is usually pretty much every time so far in history, not sustainable. So keep things in mind. They're all relative, but there's going to be a ton of opportunities for the base lending of ADA now that we have a platform like Liquid Finance to lend and borrow on. In the tweet above, they're only referring to, though, yield sources 1 and 2, and the other 4 yield streams are added to this base yield to get the total 6x ADA supply yields, which we'll go over now and just discuss each part of it. But everyone is asking for marketing, but the real marketing likely is going to be not Liquid pushing out their agenda and, telling everybody how great the platform is, but just the QADA yields and the percentage of APY that people will be seeing on the DeFi Llama page. If you don't know what I'm referring to, it is right here, the yields page, and you can kind of see the different APYs. And this is suggesting that Liquid's token would be quite up here and providing a large APY, which would then make it very attractive to people even outside of the Cardano ecosystem and a great tool for marketing without even actually marketing. Okay, now let's go over the 6x yields for ADA suppliers with Liquid Finance. The first yield, pretty simple. This is just supplying ADA to Liquid Cardano market, and this would have Liquid staking yields of 4% ADA staking rewards, now around 3.5, so this infographic is a bit out of date. Mint Q ADA, supplier interest generated from borrowers' accrued interest. Then after this, you can stake Q ADA, earn LQ governance tokens as your ADA supplier, and staking yield grow, another piece of yield. And then after that, you can stake those LQ tokens that you're earning and put them in a safety pool to unlock voting power and earn a share of protocol revenue plus more LQ. Next, the fifth version of yield is going to be providing liquidity with LQ and ADA protocol revenue on a Cardano DEX to earn liquidity pool fees. This is one that is, a bit iffy to me. I am not probably going to be providing liquidity on these pairs, especially at mainnet launch, as they will be quite volatile. And I'll be keeping my eyes on positions, but most of my positions that I open personally are going to be ones I don't have to manage or go into much, which also reduces my amount of profit that I can make. But at the same time, I am not someone to fiddle around in the early days of this and the riskier parts, which have more inherent risk, like liquidity pool provision. So that's just me. You got to make your own decisions, but your risk tolerance is going to adjust, and the amount of profits you make may also adjust based on that risk tolerance, because you may miss out on opportunities or not take part in opportunities that are here, like a fifth version or a fifth format of yield that I am going to, or you are going to not. And 6 is staking these LP tokens to earn the DEX's protocol governance token and also earn LQ from Liquid's DEX incentives program. So Liquid Finance will be, I assume, providing LQ to people who are providing liquidity to these pools inside of different DEXs just to get the ball rolling in their token. And a lot of DEXs do this, but these are limited time offers. So this whole 6x yield is great, but keep in mind, some of this is time-based, some of this is not going to last forever, and a lot of this, like 179% yields, probably won't be sustainable long-term, but there is good opportunities that lie here. Now, Liquid Finance, I'm very excited for it. Lending and borrowing on Cardano in general, without all the 6x yields, just what they're enabling and what they're having come into the ecosystem in a streamlined UI and much more. Hopefully, testnet looked pretty good when I was on it, other than when it didn't load, but the UI was still good. Aside from that, though, mainnet I think is going to be a hit, and I do think that Cardano has a lot of things coming that have been waiting for a long time. Liquid is one of those things of quality that is been in anticipation for forever. I do want to cover their token though here in the video. This is aside from what I just mentioned. I do think that Liquid is a great protocol, but there is some things you should keep in mind. Even with 6x yields and great opportunities, there's also the golden question of winning in DeFi is, are you the liquidity or are you making the liquidity? And by making, I mean taking. So essentially right now, something to keep in mind, just to put in the back of your head, is that for fair vesting in the vesting schedule of LQ tokens, the amount of LQ tokens released per epoch or every 5 days are around 35,000, 36,000 if we round up. And this right now on market price is 1.1 million or $500,000 worth of ADA. So put that in the back of your head. It really depends if there's going to be a lot more people participating in DeFi because of Liquid's launch. But $500,000 in Cardano's current DeFi ecosystem makes some slippage. It affects things, and it is definitely a big number or whale size for the current volumes we're dealing with in Cardano in terms of DeFi at the moment. Now, I'm not trying to FUD LQ or talk bad about them. It's just what is happening. There's 40,000 or 39,000 tokens of LQ going out into vesting. I don't know if they're going to be sold every 5 days. They are going out into circulation, and the supply is increasing. aka if the price stayed the same, the market cap is going up $500,000 every 5 days. So keep that in mind, okay? It's just something that is pretty important. I don't want to see people get burned because they're super bullish on ADA, so they will buy LQ, and then turns out there's a bunch of vested tokens that get sold in the market. You have to keep these things into account, and I want people to be aware of this, as the yield also is mainly reliant on LQ. So if it's reliant on LQ, and you're relying on LQ being worth 54 ADA, maybe think twice what happened or what may happen to the price when we're seeing 39,000 LQ tokens being unvested every 5 days. This is just food for thought, but these are open market tokens. They will be able to be sold. They will be unvested, and that is the point of vesting schedule. So it's not crazy amounts, but it still is a lot, and people should keep that in mind. Now, keep in mind also that the diluted market cap right now of LQ is around $1 billion ADA, or $500 million. One important stat to keep in mind, however, is that the daily volume is around 1 million ADA. That is less than the amount that is being released every 5 days. So 1/5 of the days would have to completely counteract and all be that 5 epoch release if those vested tokens are to be sold. Just keep in mind that the daily volume is around 1 million ADA, and the vested tokens being sold are around 1 million ADA. So you can see how the market could be slippage tolerant and intolerant to go back down in price if those vested tokens are sold, or if a lot of tokens are sold also through not only vesting, but other means of LQ distribution, like all their staking incentives and everything else, and people actually farming and selling their profits from their 6x yields. You have to keep these things in mind. It is important to note that a lot of tokens will be coming into supply, a lot more than there already is out there, and this 54 ADA price may not hold. It may go up. Who do I know? I'm not a wizard, so you have to keep that in mind though. Just please be careful. We are 30% up in price with a ton of volume, and it still is below 1 million ADA. So 1 million ADA worth every 5 days will affect the market quite heavily if it is put on the open market for selling. Also, before I end the video, I want to go over the self-reporting feature over here on CoinMarketCap for LQ of 365,000 LQ in circulation. This is a self-reported circulating supply. It's not 100% guaranteed, but it's 365,000 LQ, making a market cap calculated based on what is out there of 7.3 million. Sorry. So that's quite a bit different than a market cap of, if the full supply was out there, 420 million, or $500 million. Keep these things in mind when you're looking at tap tools. This market cap is diluted. It is 1 billion ADA because that is based as if all of the tokens or LQ were in distribution when they are indeed not. Keep these things in mind. Very important stats to just put in the back of your head. But that's all I have for you guys today. I'm excited for Liquid Finance regardless. I just want to throw those disclaimers out there. I think they're very important. I know a lot of people will be getting into DeFi on Cardano with Liquid. Don't be scared just because I said this, or maybe you should be scared, but proceed with caution. Still enjoy the application. You can still benefit from it without 6x yields and using lending and borrowing platforms. And there is a lot of good things that come of this, so don't just be completely put off. But I'm not a financial advisor. I live in my mom's basement, and I don't know that much at the end of the day. And you guys are going to have to make your own decisions. Anyways, I'll see you guys in tomorrow's video. It's been your friend Jack. Peace out.